What is going on? Welcome back to Trending Stocks. Today I want to talk to you about SoFi. I want to give you a breakdown on what truly happened today, go over some of the data points, what shorts did, and everything else you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So SoFi did go down 6.34%. After hours is going down slightly, 0.32. A lot of volume, so 75 million shares being traded, 44 is the average. So looking at the intraday, there was two different situations that did occur. The first half and the second half. The second half was more correlated with the broader market. So I'm going to break it down on both. Today, there was no news, no SEC filings, nothing like that. When it comes to options, $14 million in calls being purchased versus 5.5 million in puts. So kind of evenly divided as far as the sentiment, a lot more calls. Looking at the calls that were purchased, it is anticipated for it to be above $10. I don't know if that's still fairly realistic, but it does look like a lot of people are still, even next week, are anticipating for it to be above $10. Looking at puts, it is anticipated to be sub $9. So a continuation of the downtrend. So that'll make a little bit more sense when it comes down to the technicals. Shorts. So shorts did return 184.39 thousand shares. 15.21% of the free float is being shorted. 136.11 million shares overall are being shorted. Cost to borrow average is 0.92, a little bit higher in comparison to yesterday. And through Interactive Broker, short availability does indicate that there is around 10 million shares available to be shorted. So shorts didn't really do all that much today. And even if you kind of, aside from SoFi though, which did have a lot of volume, a lot of other stocks, growth stocks, didn't really have that much. So it wasn't really getting that much interest. But like I mentioned, there was two different situations that did occur for SoFi. So the reason why it went down at this beginning part was because of the technicals. And I did say this and lay this exactly out yesterday, that if it did fail to break above that $10 resistance point and stay above it successfully, then it was going to retrace back down to roughly about the 977. And it did that almost to an exact T. So right here, it did go down to 977 exactly. So it attempted once again, failed. So typically whenever it does fail to get over either a support or resistance point, consolidation does occur and then it tries again. So this is right here was just failed SoFi technicals. Very natural, but this is a completely different beast because this happened across the board. And I feel like a lot of people are questioning on what exactly that is. But then again, if you think about it, we're almost 1 week away from the end of the year. And so when that does typically happen, you get a lot of rebalancing. So what happens is, for instance, for someone or an institution to have this much reach where almost every single stock does get pulled down, it does mean that it's one of the bigger players in the market, such as if we look at the ownership for SoFi right here, is either BlackRock, Vanguard, or other State Street, for instance, has to be one of those players that almost has their hand in every single stock. It was them. They were rebalancing absolutely everything and rotating it possibly into crypto or probably not realistic, but fixed income. So they were moving it out of equities. So unless they anticipate something substantial happening that would really disrupt the equities market, I'm not really sure. But hands down, today was just, it wasn't shorts. A lot of people are saying it was shorts doubling down on the broader market. It wasn't, like I've obviously shown you. It was just simply rebalancing. So nothing really crazy. It is kind of concerning though that a lot of the bigger names, like I said, either BlackRock or Vanguard, did pull money, this much money, out of the market into the maybe crypto market. I'm not really sure. They did remove it fully from the equities. So interesting stuff. We still don't really know why they did that. And there hasn't been any actual news to justify that other than potentially what's happening out in close to the Red Sea. So maybe that is causing a precursor that might come, or I don't know. Once again, there's a lot of different circumstances happening, but the fact that it had this much reach, it does signal that it most likely was one of these two players that were just rebalancing their portfolios. But Moving on from here though, going over some technicals. Actually, while I'm still on Interactive Brokers, I'll go over the Elliott wave while I'm still here. So a lot of people really did like this, and actually, to be fully honest, this did look like it was going to follow almost to a T to around the $12 mark, but assuming it still stays above their pivot point of $8.42, then it is anticipated to be between the $11.70 and $12.34. So who knows, that's still very optimistic. Let me know your thoughts on that. And GDP numbers are coming out tomorrow. I know I've kind of said that numerous times throughout the last couple of videos, but that is either going to make or break the market, because if it is negative, then this is going to continue the spiral down and it's going to follow the technicals. But if it is surprisingly better than the 5.2 forecast, then you are going to see a continuation of the rally, and this dip that did occur today is going to get bought up very fast. But looking at some of the fib levels, with it at $9.31, it is between this pivot and the R1. So $9.77, since it did break below that and closed below that, that is now going to be resistance. So you'll want to watch that in the short term. $9 is going to be the next strong support. If it does fail to hold, then $8.23. So the individuals that were buying puts are anticipating for it to break below this $9 mark, so this pivot point right here. So this is why I like to look at the technicals, data points, because if you take the emotion out of your investment, you can easily tell where things are going to go, at least and realistically in the short term. Of course, the crystal ball doesn't always work every time, but it does give you a fair indication of what might be coming. So $9 and then $9.77, those are 2 points to watch for. So once again, if GDP is good, then if it tests this $9.77, then it'll be back at that $10 range. If it's negative, then anticipate between this S1 and the pivot. But moving on, looking at some of these indicators that I like to look at, the momentum indicator shows number of retail investors we're getting out today. Stochastic is at 89, so that is considered very overbought. So if GDP numbers are negative, then you are going to see a even swifter pullback based on the technicals as well. And it won't just be SoFi, it'll be the broader market. So it'll be another very vast red day tomorrow. So we'll just have to wait and see. There is no defined trend right now, so that's kind of a positive, but a lot of things are kind of stuck in motion right now. So we're just waiting for data points at this stage to see if we have the green light for a continuation of a rally, or if this is going to spark a further downtrend. So let me know your thoughts on that as well. Why do you think that, for instance, a bigger player in the market was pulling money out of equities to really cause this downtrend? What's your thoughts on that? Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And if you do like my channel and support the growth, take a look at my memberships. Link in the description below and also the comments. But with all that said, appreciate all of you watching.